Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. Let's take a look at the midweek market update. We are still, unfortunately, now more so than ever, connected to the NASDAQ, the S&P in the Bitcoin world. And it's interesting, I'm seeing all sorts of correlation time frames come out of the woodwork. The 40-day, the 30-day, the 180-day. I think no matter how you look at this, we're extremely connected and correlated to NASDAQ, both Bitcoin and Ethereum, which is certainly problematic for most people when they're looking at a near-term decorrelation or decoupling from traditional finance. Right now, this is just how it's panning out. So if you're focused on the near term, this is what you're going to see, obviously, is this connection to NASDAQ, especially since April. Since the beginning of April, it's just been extremely connected. And we can see that even on the 5-minute here. Even BTC and ETH very connected as well. Not a bullish sign. So we have that to contend with. And we also have still the only white background I have in this video, but the Luna wallet, where they're still buying BTC. The BTC buying has slowed a little bit. This is for the UST reserves. I'm not going to go into that deeply in this video, but they're still buying by the looks of it. And they've said that they look to buy or are looking to buy 3 billion, as much as 10 billion over time. 3 billion in the nearer term. We'll see what actually happens, but they're at nearly 40K BTC at this point. We'll start under the hood with Glassnodes. And what you'll notice here is we are seeing declines in price that match declines in on-chain activity. It's not really a secret. The more activity you have, the more bullish an asset, a digital asset, tends to be. And you can say the opposite is true with declining on-chain activity. And it can be leading, it can be lagging, but if you're consolidating like we were in 2019, 2020, and on-chain activity, in this case, active addresses, were flat and actually beat price here. Active addresses were rising faster than price, at least to my eye, just looking at it, right? You can see, well, that was a leading signal, right? You can start to get more bullish here. You can start to get bearish when we fall off the table in active addresses before price. And currently, we're still in the range. Nothing to write home to Ma about, right? There's nothing special going on here, but something to watch for while we're in the range is whether or not we break these lows on active addresses or the highs, right? There's a lot of questions around, are we going to break lows in price in this year-long range, right? And I'll get to longer-term biases later on, but just focusing on these correlations to legacy, focusing on these near-term on-chain activity metrics, it's definitely worth keeping an eye on stuff like this. It's worth keeping an eye on transactions, which is why when we started breaking out of transactions per day, which was really a quarter high, right? This is a 3-month high in transactions per day. It looked real to me, right? It looked like we had some actual fundamental reasoning behind this. And you can say, well, price is up. Of course, on-chain activity is going to go up. That's fair. But it wasn't like price rose on its own. There was definitely on-chain activity to back that up. So it's also worth continuing to watch this because we very well may see price remain in some sort of tight range with active addresses or transactions per day perking up more and more, and it's definitely worth paying attention to. Again, you can see here in 2018, I talk about this every video, but what we're not seeing now is this. We're not seeing this crazy cliff of basically a 75% plus reduction in on-chain activity leading price, right? Not really seeing that here. This reduction here was related to miners mainly out of China, right? The great miner migration. But we're not seeing a continued collapse here, which is good. We are seeing a continued collapse of balances on exchanges, which historically has been bullish. The less BTC on exchanges, the less BTC to be sold. Generally how this works. Whenever there's fear or euphoria, if we zoom way out, we can see that there are certainly perks in balances on exchanges, but since the COVID lows in March 2020, BTC on exchanges has continued to decline. So again, I would be much more bearish if I was seeing deposits ramping up, right? If you're in a range and you're seeing just deposits ramp, then I get nervous, right? In the near term. I'm talking near term. Because to me, that just represents people sending it to an exchange to sell, right? Pure speculation on my part as far as what goes on there. But in general, personally, I don't move coins around unless I'm selling them for the most part. Now, certainly there are other ways to use Bitcoin, Ethereum now these days, lending, borrowing, etc. But at the very least here, we're not seeing a mega spike in a bunch of people deciding, you know what, I've had enough holding, I'm out, right? We're not seeing that here. And another way to quantify who's hodling right now, or who's holding right now, is let's look at the actual blockchain, because we can. This is Bitcoin after all. We can look at when every single UTXO, when every single coin has moved since inception, right? Super impressive that you can actually see this, right? But that's the power of blockchain, right? So we can look at this on aggregate and say, okay, how many coins as a percentage of the network have moved in the past year? We can also look at it from the other perspective and say, how many have not moved in the past year? So in the past year, 64+% coins have not moved, meaning in the past year, and this may continue to increase should activity sort of just continue to do nothing, right? You're seeing fewer and fewer coins change hands or move addresses in the past year. And a lot of people are correlating these highs in dormancy flows is what they're called. Coin days destroyed. You'll hear all sorts of names. Essentially means the same thing, where you're not seeing spikes in activity. And people are correlating this with previous bull runs in Bitcoin's price. And for me, it's a tough sell sitting here saying, yeah, dormancy flows are going to save you if we break lows, right? In the near term, in the ultra near term. If we break lows, we're in trouble, right? If we break 35, because this is an established price range that everybody's watching and has been watching for an extremely long time. To be fair, it's the lows basically between 30 and 60. Intra-month volatility has been between 35 and 45, let's say. Even still, with all the volatility we're seeing intra-week, intra-month, we're not seeing, again, a ton of people deciding, all right, I'm out, right? You're just not seeing that. You're not seeing it on exchange balances. You're not seeing it in on-chain activity. You're just not seeing it with coins, right? People are deciding, you know what? I'm going to keep holding. And for some people who believe in on-chain activity as a tradable metric, they're looking to that thinking, yes, this is bullish. We'll see how it pans out, right? I'm curious. I'm excited because we've never seen coins not move for this long as a percentage of the network, as high as it is. Something else to watch to see if we're getting sort of too bullish, too bearish. Do we need to rubber band? Is futures perpetual funding rate. This is all exchanges. This includes BitMEX, Binance, right? Everybody, Deribit, Huobi, etc. And it's natural to see an expansion of premium when you're bullish, an expansion of premium at the beginning of long-dated contracts like quarterly rollovers. That's certainly natural. It's natural to see declines in premium or discount when you see mega bearish activity, right? Currently, we're not seeing much of anything, right? We are still, again, this is the hardest part for me to wrap my head around. And I certainly believe it's incredibly difficult for anybody who's not accustomed to this to wrap their head around, is even with the intraday volatility, intra-week volatility, the largest range likely we've ever been in, right? Because most of Bitcoin's history is sub 20,000, certainly. We're in this $15,000 range. Even despite that, we were actually tightening on funding as far as what people expect to happen, right? If a lot of people get bullish, you're going to see a bullish premium. If a lot of people get bearish, you're going to see a discount. We've just kind of seen it flip back and forth, right? Just ping pong, ping pong. We're not seeing too much go on, right? We're not seeing bulls win here, bears win here. So something to watch for is, do we start to see consecutive bullish or bearish periods along with an expansion of that discount or premium on the funding rate? Something else to watch. It's been certainly interesting watching the BTC liquidations. Again, this just goes to show you, we just liquidated a series of, what was this, like 300 million shorts? This was March 27th, right? And then we come right around and all of a sudden we're liquidating nearly the same amount of longs, right? When we're talking about derivatives. So there's a lot of slosh, a lot of chop for this massive, massive range on high leverage, which is a lesson to say, hey, don't trade this on high leverage, right? Not investment advice. Do whatever you want to do. But this is a dangerous game right now with high leverage. Now flipping gears to TA, We're going to zoom way out again because when there's noise, when there's intraday noise, intra-week noise, the best thing you can do is just zoom out. Zoom out in Bliss and see what's going on. This is the Bitcoin rainbow chart. Helps eliminate noise, daily volatility, weekly volatility. And we're essentially pretty close to median, right? The middle, the yellow point here. This gives you a good idea of overbought, oversold. You can see historically down in this blue region, that has been a bottom. Anytime it's got there, doesn't mean it will be in the future, but has been a bottom. Gives you an idea relative to halving, how we've done rather well after halving and how far away we are from halving now. A lot of people talking about that. All just data points to take into consideration, right? And to adjust expectations accordingly. The question is, can we have this mega bullish run in the middle of halving cycles? Is it possible to have this because we had this year-long consolidation period, right? Assuming we don't go lower. Certainly a lot of ways that this is very different than post-halvings of times gone by. We can also look at my favorite, the 2-year MA multiplier. The green is the 2-year MA here. The red is 5 times that MA, and the white is the midline. And historically, anytime we've gotten below the 2-year MA, the 730 MA moving average, that's told you, okay, we're oversold here. Anytime we've gotten above that multiplier, it's told you we're pretty hot. Get ready for a return to mean, if you will. And we didn't really see that blow off top, if you want to consider it that. In 2021, there's some argument that we're probably not going to see this mega bearish winter for 2022. You sort of need that momentum to flip back and forth, and we didn't really get that, right? So we may just continue just oscillating here indefinitely, but let's say we go lower. For me, that's when I start buying because I like this indicator, right? Not investment advice, trade your own book, et cetera, et cetera, et cetera. But down there is where, for me, it's worked out well to start dollar cost averaging, for example. Can zoom in a little bit, look at the pitchfork since 2019, pick 3 points to get a rate of change. You're not going to see this all the time or every time when you have extremes in price like this. And a lot of people don't like that I use the wick from Corona, COVID 2020. But if it fits price, it is what it is. So this has arguably fit price rather well. It's told you, yeah, we were a bit overheated up here. And it's going to tell you we are a bit oversold should we drift into the aquamarine region, right? And again, we're still in this mega range, 30 to 60. We're in this mega range from 35 to 45. We're below yearly pivot, which is basically the middle of 30 to 60. So we're neutral for the year, as ugly as that may sound based on the volatility, but we're on the bearish half of neutral in the range. You certainly want to be above 47, 48 to consider exploring the top, right? It's very simple. You have a range. If you're in the bottom half, you're probably going to stay there until you break through the middle, and then you can explore the top half, right? Generally how this works. One thing I want to talk about is Bollinger Bands. This is a lot of fun colors, but Bollinger Bands tell you when volatility is contracting or when it's expanding. When volatility is contracting, it tells you to get ready for a move, and when it's expanding, it's telling you that volatility is picking up, right? And even though we are as seemingly volatile as ever, right, on the weekly's telling you, you know what? Based on 2 standard deviations outside of the 20-week MA, we are actually contracting. Volatility is contracting here. Down here's Bollinger Band width, and you can see that at this width, these colors are telling you this has happened 9 times prior. At this width, at this caliber, right? This thickness of the bands. And B-bands also help tell you if we're above or below that 20-week, in this case, MA, prior to that squeeze, or as that squeeze is happening, there's a bias for bullish continuation or bullish resolution. If you're below, there's a bias for a bearish resolution. And finally, if you're above or below for several weeks, right, and this just squeezes and squeezes and squeezes, volatility tightens, then you can look at backtesting and say, what has it told you? Well, it's told you on backtesting that this thing is basically never wrong, which is dangerous to even say, right? But when you look at these squeezes that are multi-week or even of this caliber, right? This one squeezed, we were above the 20 MA the whole time, led to bullish continuation. This was a 1 week squeeze of this caliber. It was pre-COVID, so you could say this was a dud, right? It didn't go in the expected direction. 2019 squeeze led to bullish continuation. 2018 squeeze of this caliber was multi-week and led to bearish continuation. 2016, we had 2 of these squeezes, both leading to bullish continuation. And this can flip-flop, right? We can be above, we can be below. But in this case, again, multi-week squeeze, but it did squeeze above the 20 MA before going higher eventually. And then these are no contest in 2012. Squeezes of this caliber were always above the 20 MA. So seeing us consolidate and tighten on Bollinger Bands being below the 20 MA here is concerning if you're bullish. It's concerning if you want this range to hold, right? It doesn't mean we can't save it in some way, price that is. It just means right now the bias is not on our side, and it certainly feels like that. The swiftness at which we gave up 48 all the way back down here to 39 and change. Here's the weekly cloud, something else lots of people were asking me about. I like indicators that are on extremely high time frame, easily back tested, very few signals, and are rarely wrong, right? Who doesn't love all that? And you can treat these blue-red crisscrosses here, these TK crosses as they're known, you can treat those as MA crosses if you want. Historically, these have mainly worked out. And right now, it's suggesting that we are ready for bearish price action again. You just can't shake this possibility of lows. It's not about where price goes necessarily. It's just about being prepared and ready for that. So today, this shows bearish TK cross. And if it gets below the cloud, which is the ultimate trend determiner, as far as being above or below, above or bullish, below or bearish, we don't want to drift below the cloud on the weekly. Historically, we've done that twice in the past, let's say 10 years, excluding COVID, and it's led to multi-month bearishness, right? So that is certainly in the cards if we decide to go lower, below the cloud. So that's important to keep in mind, obviously. And we can save this by negating this bearish cross with a bullish cross with price above the cloud, right? If this, then that. If we drift below the cloud with current cross, the expectation is bearish. If we continue to squeeze below the 20 MA, the expectation is bearish. So these are definitely things that I'll be watching for in high time frames. Something else I'm definitely watching is the daily cloud, which we're starting to get below that as well, despite holding in it for a significant period of time. Now by May, we could see a bullish breakout, but May is a lifetime away when you're seeing price deteriorate as quickly as it has over the past week, down 15% or thereabouts. So we are still working on this. Arguably, I'm going to continue to argue it as an ascending triangle. You can see we hit the 200-day moving average cleanly, the yearly pivot cleanly, as well as this VPVR volume node rather cleanly. So we do have tons of support lower based on volume at these prices. And this could course correct, right? It certainly has plenty of times in the past 3 months. So it's not out of the question. As bearish as we are today, we could be equally bullish tomorrow, and then everyone's going to be singing a different tune. It's just not an easy market to be trading here in the near term with volatility plus or minus 15% week over week, price rather, plus or minus 15% week over week. So not a clear forecast here for me on Bitcoin this week. Looking at a lot of stuff on high time frames and on the daily. And if you're trading anything lower than that, I wish you much luck indeed. Flipping gears to Ethereum. Ethereum is also in a bit of a pickle on-chain activity because active address is coming way off here. And again, you can say, well, we're in the range, right? This isn't that big of a deal, but I'd say you're right. But we definitely don't want to see any lows there on on-chain activity. If price is in a range and on-chain activity is collapsing, I'm not going to be as bullish, right, for that price range. And this is where it's starting to become an issue on transactions, because you are seeing this slow drift down on-chain activity, right? So that is problematic if you're bullish ETH in the near term. But again, arguably it's still within the range. It's still near its all-time highs of 2018. I don't think there's anything to worry about in the ultra near term, but it's definitely something worth watching and following week over week here, as we're still in a price range. Now, ETH's balance on exchange is completely falling off a cliff, as there's a myriad of ways to have fun with ETH in DeFi or other ways, lending and borrowing. Just a complete 180 from post-ICO days, where we saw just continued deposits of ETH. Really, post-ICO, pre-DeFi, there wasn't too much to do with ETH besides speculate on it or put it in ICO and to speculate on it, right? MakerDAO existed at that time, but most of the DeFi as we know it wasn't really at the capacity it is now, obviously. So you're seeing that ramp up. And you can see this shift in deposits to withdrawals was no coincidence, kind of the bottom of the current bull run, right? We are almost at levels not seen since the peak of ICO mania, which is crazy to think about. A lot of this ETH is going into DeFi, or it's going into ETH 2.0 staking address. So really just a breathtaking drop from 31 million ETH down to nearly 20 million ETH. TVL, which is total value locked in various DeFi smart contracts, is still ranging as well. No surprise, a lot of that underlying is ETH, but there's also a lot of stablecoin in there as well. This is also worth watching. If you start to see on-chain activity drooping, or if you start to see TVL drooping, then that's the market telling you that's probably worried about price. The opposite is true as well. If you see TVL popping off, if you see on-chain activity picking up, then the market's probably telling you expect a bullish resolution to this range, right? Everybody always wants a leading or lagging indicator. And those are things you can watch, things that can be leading at times, don't appear to be too leading currently. Just like Bitcoin's funding on futures, ETH funding, kind of flat, kind of all over the place, right? There's no clear bias here in this range, one way or the other. From futures traders, you can see how that looked differently November 2020 to May 2021. Even back in September, November 2021, we had pretty positive funding rates, where here there's just, it's just flip-flop back and forth. Pick a day, flip a coin, and we may see bullishness or bearishness in one direction or another. ETH's liquidations as well, again, no different. We're going from liquidating all of these shorts extremely quickly to just liquidating all the longs extremely quickly. Just another way to visualize the chop, the true pain, right? This is the true pain. All these liquidations in a very, very short period of time on both sides of the book. Some ETH TA here on the 1 year MA. In the 1 year MA multiplier, ETH's actually been in that oversold zone for really 3 or 4 months at this point, just sort of chopping around down here. The thing with ETH is there's not a lot of price history here, and historically is post-ICO boom, it was in the buy zone, let's say the DCA zone, for a year. So just because we're here now doesn't mean we're going to just flip bullish to 16K, right? That this could take a long time. So zooming way out, it just tells you to be cautious. It certainly tells you be careful of lows here, because we are in that territory. Just because we're oversold doesn't mean we can't get more oversold. ETH's B-bands as well look similar in that we are tightening with price below the 20 SMA. Just another great determiner for trend. Backtesting, this looks rather clean as well. Bearish, bullish, Corona, bearishness, bullishness, ICO bullishness here. Post DAO collapse bullishness here, right? This flip-flopped all over the place in 2016, but ultimately at this caliber led to a breakout. So again, this tells me that this squeeze is worth paying attention to, and it's probably going to be right. It's probably telling you it's worth being cautious here, as choppy as this is, because when volatility contracts to this magnitude, we typically do have a bearish resolution if we are below the 20 MA. Just something to watch out for. Look at the daily cloud. Also in the cloud, just mega chop, right? If you trade the cloud, you want to be above or below the cloud for a clean trend. It's called the cloud for a reason. It's cloudy, it's murky, it's dirty, it's swampy. We're all over the place. It doesn't tell you anything trend-wise. If we can get into May without falling off the bottom, now this looks a lot better than BTC, admittedly, but if we can get into May with a price target above 32, then I can get bullish again in a big, big way. But here it just looks like chop to me. We did have a resolution out of this triangle, but it looks like we're headed all the way back down here. Not really respecting yearly pivot as support, anything like that. There was a bit of a bear div here, didn't quite reach the target. So certainly a significant amount of chop. Did gain some ground on BTC, but still just as choppy all around. Here's the ETH BTC breakout at 0.73, also with a bearish divergence here. But I like ETH BTC on high time frames because, again, it's held this tight range ascending triangle, which typically has a bullish bias. If you're consolidating into a horizontal line, you are more likely than not going to cross that line. And that's a basic premise of any chart pattern. And if we continue to make higher lows here, this bodes extremely well for ETH BTC. Now, we may do this with BTC collapsing more against ETH. It's certainly possible. Historically, I don't think that's happened too often or ever, but that is one way to gain against BTC if you're an altcoin that is just collapsing a little bit less than BTC in a bear market, right? Just looking at both sides of the possibility range here. Then lastly, DeFi perp. Again, it's not quite in the previous range of the year. It's below the 200, below this VPVR level, below the yearly pivot, nearly below the cloud. Massive, mega, nasty chop, It did positively break out of this bull div falling wedge, which is a classic reversal pattern coupled with divergence, but doesn't quite have the strength just yet to lead to bullish continuation. This effectively was mean reversion across the board. ETH, BTC, DeFi. DeFi perp is just an index on FTX of market cap weighted DeFi coins, but it's telling you, look, here's the 200 moving average, right? So this was a mean reversion across the board. And the net was nothing, right? We're just right back into all these ranges again. So that's all I have for this one. Let me know what you think in the comments below. What'd you like? What I miss? Don't forget to subscribe, and happy trading.